This has only happened one other time since 1978, and you need to pay attention to it because this is a marker that we usually see at the bottom of bear markets before a massive bull rally. So what is about to happen in the markets and what happened? The Russell 2000 last week was up plus 3% on the day while the S&P was severely red. The spread was about 5.5% between the Russell 2000 and the NASDAQ as well. And like I said, these are signals that we usually see when recessions are over, signifying a massive rally to come. So let's get into it. If you care about your portfolio and you care about exploiting the market for easy money-making opportunities, you definitely want to stick around. Let's get right into it. So the Russell 2000 finally broke out of this 2-month consolidation and broke above this 2-year resistance line that you see here. Now, on this day, on July 11th last week, the Russell 2000 was up 3.5%, all while the NASDAQ was down 2.5% for a spread of about 5.5% between the Russell 2000 and the NASDAQ. Now, there are a few implications for this. One being that the Russell 2000 could be well on its way to catching up to the S&P and the NASDAQ and finally hit its all-time highs that it achieved in November of 2021. Now, if you look here, this is actually something that I was waiting on all the way back in November, which is when I bought IWM. When I bought the Russell 2000 was back in November, when there was data coming out showing that this was the largest disparity between small caps and large caps ever. And as you know, I like to exploit extreme irregularities in the market. So I actually expected the Russell 2000 to climb faster than this. It did have a nice rally since November. However, it was stuck consolidating really since December 2023 until that breakout that I just talked about. So not only does this have implications for the Russell 2000, which I will talk about if there's an opportunity there, but more importantly, this is usually a signal that we see at the bottom of bear markets and after recessions. If you look here, the last time that we saw something very similar, not to this degree, but was in 2020, late 2020, at the start of the bull market at the time. And as I said, we also saw this in October of 2008, as you can see here, right before we had a massive rally. As you can see here, the market bottomed a few months later, and then we had the biggest bull market in history. So right now, the stock market is trading as if we already did cut rates and as if we already went through a recession. Now, I'm going to tell you why I think that is, because this is definitely the first time in history that we've ever seen this. So most importantly is the inflation data. So right now, we've had back-to-back months of lower than expected CPI year over year at 3.3% year over year that came in on June 12th and 3% year over year that came in on July 11th. This was the first back-to-back month of lower than expected inflation since August 2023. What's more significant than that is month over month, this is the first time that we've actually had deflation, where month over month came in at minus 0.1% versus a forecasted 0.1%. So as you can see here, this sent the probability for a rate cut through the moon in September, where before this, the first rate cut, the expectation was that it would come in November, likely December. Now September, almost 88% bets that the Fed is going to cut its first rate in September. And because of that, you saw bond yields crashing, which also then brings down the dollar. And that helps small caps in this type of environment, especially if the expectation is that we're going to get lower rates next year. Then the forward projection is that small caps will finally do well again, breaking out of this pennant here and finally marching towards what I think will be that all-time high that we saw in November of 2021 when IWM hit 244. So all that is to say is that the stock market, which is usually the dumbest of the bunch because it's the latest to act, is now pricing in that the Fed actually has already achieved a soft landing. Obviously, the Fed hasn't cut yet. Obviously, we're not at 2% year over year yet. But now the way that the market is moving is, that disparity between the small caps and large caps, which we usually see after recessions are over, near the bottom of bear markets. The market is now signaling that they expect that the Fed actually is going to achieve a soft landing. Now, my view on this, if you guys have been following this channel, you know that I actually don't believe that the Fed is going to achieve a soft landing because it's never happened, right? The Fed never cuts until something breaks. However, I was laying in bed the other night and I was thinking about this. A couple of things. The way that the BLS now calculates CPI, you might not remember this, but in 2023, the BLS changed the calculations of CPI So it says here, rather than continuing to use these spending weights in 2023, the BLS updated weights to reflect consumer spending in 2021. With this change, the BLS uses 1 year of spending data rather than 2, and updates every year rather than 2 years. And 2, maybe that's something that was supposed to break were the bank failures that we saw in 2023, if you guys remember that, where the Fed then started a new program basically backstopping all deposits, saying that there will be no lost deposits. We don't care how much it costs. We'll print as much money as possible in order to save the banks. So with those things, the changing of the CPI readings, as well as the fact that something did already break, but the Fed then came in to print more money in order to save it, maybe with these new mechanisms, maybe the Fed does achieve a soft landing. Obviously, this would be considered, I guess you can call it cheating by standards, right? By the typical standards that we have. But maybe they do achieve a soft landing because they keep on, changing the way that things are calculated. So of course things look better than they are. Even if we do hit 2% inflation, it's not really going to be 2% if you use the old way of calculating things. And maybe we already were going to get a recession if the bank failures were allowed to fail in the way that banks failed in 2008, without the Fed resorting to money printing immediately in order to stop that from happening. All that is to say, I think the markets will be pretty easy to navigate here. And regardless, I think this is a win-win situation if you're an investor, because as I said before, I will never try to predict when a recession is going to happen, right? I'm still leaning towards obviously the Fed not engaging or not executing a soft landing, because that's never happened before. But with these cheating mechanisms, who knows? Maybe we are in a new world, in a new environment that we've never seen before, and maybe we do get a soft landing, if they have more levers that they can use behind the scenes in order to achieve that. Who knows? Either way, my point is that, and this is what I've been saying on this channel all along, that you stay invested until you get that first clue that something might break. And historically, that first clue has been the first rate cut. The Fed has never cut rates without something breaking, right? So whether the Fed does engage in a soft landing or not, I think that the market continues to go up from here until at least the first rate cut. And then at that point, you can make a decision of whether to take profits or not. But I do think that this breakout in IWM in the Russell 2000, I think we do get to all-time highs, because as I said before, and I was maybe a little bit late on my thesis, even though, like I said, we've been in this since November and captured the large move, but then we consolidated since December. But my thesis is that the Russell 2000, that small caps end up catching up, and we see a rotation from the S&P 500 to the small caps. One other thing I want to note is that so far, if you look at the forward PE ratio, the companies in the S&P 500 are actually doing just as well as they ever have, right? This is not a high PE ratio by any standards. We're currently trading around the average of 20 or 21 forward PE ratio, right? Somewhere between 20 and 21, which is the typical average for the S&P 500. This is even way lower than before the pandemic, when the forward PE ratio was 26. So companies in the S&P 500 look like they're doing fine, look like this is operating normally, and again would support, unless something breaks and we get a black swan and then we get a rate cut thereafter, everything supports a continued rally from here, whether we're talking about the S&P 500 or whether we're talking about the breakout in small caps. Now, I will be doing a separate video on this probably at some point this week or next week, but in terms of things to invest in from here, as I said, I do believe that Tesla will get to that $1 trillion market cap, even though I know that they delayed the robo-taxi event. I'll do a completely separate video on that. But I think that there is not as much opportunities when I first made that video when Tesla was trading in the 170s. I think a lot of people missed that opportunity, and then it hit 270 within a couple weeks, and now everyone wants to pour into Tesla. But I think there could be an opportunity to add Tesla on pullbacks. IWM, same thing. Been in it since November and really just been holding through this sideways action since December. But I do think that this breakout in IWM essentially sends it to all-time highs, obviously barring a black swan. I do think that a couple of individual small cap names, I did invest back into Celsius after taking profit in the $90 to $100 level. And I think that for the long term, Bitcoin miners will eventually break out when Bitcoin does its post-halving thing that it typically does when it rallies 6 months to a year post-halving. There are potentially a couple of other opportunities in Nike for the long term, as well as Chipotle. Like I said, I'll be doing a separate video on things that I'm looking to buy right now. But if you want access to all of my real-time alerts and analysis like you see here, make sure that you sign up to the Traveling Trader Academy below. Our last buys were on Tesla at 152, Apple at 165, Google at 134. And I just put out a detailed analysis on Nike and Chipotle. And like I said, we've been holding IWM since November of 2023. Anyway, if you got anything out of this video, leave it a thumbs up. Leave it in the comment section below. Let me know if you're invested in something. Are you still waiting on the sideline in cash? Are you fully invested? Are you going to sell once we get a first rate cut? Do you think we'll get a rate cut in September? Or do you think that the Fed is going to push it out much longer than that? Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.